On today's Rice Report, I'm going to be talking about the Federal Reserve's FOMC meeting and their announcement regarding interest rates, as well as the coming launch of FedNow's instant payment service. Is this a CBDC in disguise or a precursor to their rise? Before we get into it, take time to visit my website at ricetvx.com. There you can sign up for my mailing list so you can stay up to date on all things Rice. Once you've signed up for my mailing list, you will find links for my channels and socials towards the top of the website. Make sure you are subscribed to both of my YouTube channels, Rice Against the Grain and Rice TVX. If you want to support my work directly, as well as get early access, exclusive content for both channels, plus more, join my Patreon. I also wanted to share that I have recently partnered up with ITM Trading. So if you want to schedule a gold and silver strategy call to build your wealth shield and support Rice TVX, be sure to use my specific landing page that you see on the screen, and I will also include custom Calendly links and an 800 number that you can utilize to schedule your strategy call with the ITM trading professionals. And again, it is a way to support Rice TVX. I will include links in the video description for everything I just mentioned, as well as everything shared on today's video. Here we go. Here is my take regarding the Federal Reserve's FOMC meeting. Prior to these bank collapses that we've seen in the past week and a half, I kept calling for the Federal Reserve to raise the rates by 50 basis points. That's half a percentage. Today, I'm calling for the Federal Reserve to raise 25 basis points. And the market has 25 basis points priced in. So anything above will negatively affect the already struggling banks, making the problem worse, and it will affect the TradFi markets, traditional finance, Wall Street. If they don't raise interest rates, they undo all the quantitative tightening that they've done that they haven't already undone with these backstops. So the choice is banks and TradFi or fight inflation, the people. What will the Federal Reserve do? What will Jerome Powell do today? Again, I'm calling for 25 basis points. Either way, they're damned if they do, damned if they don't. And this is all because of a problem that they created by design on purpose. Now, let's dive into the next part of today's video. In my opinion, this is all about problem, reaction, solution, consolidation. So the first article I'm going to be sharing on today's video, and everything I'm talking about today will be linked down below in the video description, comes from CNBC, and it came out on March 20th, 2023, entitled, "The Federal Reserve is Still Expected to Go Through with a Rate Hike. What That Means for You." Recent bank failures have caused a crisis of confidence in the banking sector, but Americans are still grappling with stubborn inflation. The Federal Reserve is now expected to hike rates by 1/4 of a percentage point at this week's policy meeting. That's 25 basis points, as I mentioned earlier. And here's where consumers stand 1 year into rate increases. Now, I definitely encourage you to read these articles in their entirety because there's a lot of great information that people need to know. But over the last 12 months, inflation has spiked to a 40-year high and only recently started to ease. But all that monetary policy tightening has been tied to issues that are disrupting the banking industry now. And that's why I mentioned earlier, The Federal Reserve has a choice here between the banks, between Wall Street, traditional finance, and we the people. And honestly, what do you think the Federal Reserve is going to choose? If anything, like I mentioned, all these problems regarding banking, fractional reserve banking, all by design, all on purpose, and they created this problem, and somehow they have the public fooled that they have the solution. Well, that's consolidation. And that's what's happening. I encourage you to read this article in its entirety. There's a lot of great information in regards to what the Federal Reserve has going on for interest rate hikes. The next article that I wanted to share also comes from CNBC, and this came out on March 19th of 2023, and it's entitled, Elizabeth Warren says Jerome Powell has failed as Federal Reserve Chair. Now, that would be dependent upon the perspective of who you are. Because again, I feel like this is all about problem, reaction, solution, consolidation. Maybe Elizabeth Warren is trying to show face. I have no clue here. But she says he has two jobs. One is to deal with monetary policy, and one is to deal with regulation. And he's failed at both. Now, again, the answer lies in perspective. Because if you've read the book written by G. Edward Griffin called The Creature from Jekyl Island, you will completely understand this is by design. This is on purpose. Speaking of G. Edward Griffin, check out my two previous interviews that I did with him. I have a playlist that I created specifically with my interviews with G. Edward Griffin. And I'm going to be interviewing Mr. G tomorrow. And I'll be releasing that video sometime the following week. But if you want to get early access, unedited, join my Patreon channel or become a private member. And if you know, you know, and then you'll get early access to my third interview with Mr. G. Edward Griffin. And I'm definitely looking forward to getting his take on everything that's happening. So now we're going to go ahead and turn the conversation to the Federal Reserve's launch of the FedNow service taking place in July. Instant payment service. As I said earlier, is this a CBDC in disguise or a precursor to their introduction to the rise of central bank digital currencies? So this comes directly from the federalreserve.gov. Not even going to read it. This is the press release. All you need to know. March 15th, 2023, titled Federal Reserve Announces July Launch for the FedNow service. The next article I will share comes from ACIworldwide.com, and it's basically an article that explains what FedNow service is. So FedNow is an instant payment service being developed by the United States Federal Reserve Bank, i.e. the Fed. The FedNow service, or FedNow for short, is designed to offer uninterrupted 24/7, 365 processing and will feature integrated clearing functionality, enabling financial institutions to deliver end-to-end instant payment service to their customers. Well, that sounds like a summary of the Bitcoin white paper, but a centralized version, because Bitcoin does all of that, but doesn't need the centralization. So what are instant payments? Instant payments refer to any account-to-account fund transfers that allow for the immediate availability of funds to the beneficiary of the transaction, though timings may vary from one scheme to the next. Interesting choice of words. Payments are often completed in a matter of seconds. For these reasons, instant payments are also commonly referred to as immediate payments or real-time payments. Some of the benefits of these instant payments are their irrevocability, their ability to generate rich data, and their 24/7, 365 availability. Again, I ask you, is this a CBDC in disguise or a precursor to the rise? So the next article I'm going to share comes from Cointelegraph, and this was released on March 16th, 2023, titled Federal Reserve Confirms July Launch for FedNow Instant Payment Service. The FedNow service aims to reduce the gap in payment time between United States financial institutions. So the Fed is basically confirmed a July launch date for its long-awaited instant payment system. And it's seen by some as an alternative to central bank digital currencies and stablecoins. The instant payment network will settle payments in seconds and can support transactions between consumers, merchants, and banks. And it does not rely on blockchain technology. No, you don't need to rely upon that type of technology when you have something that's completely centralized anyways. So one thing that I really want to share with people, just a few pieces of information, and I'll pop on screen here just for a little dramatic effect. We have the New York Fed working on multiple things, including the digital dollar pilot, a 12-week pilot program involving multiple banks and other financial institutions, I believe, including MasterCard and Visa. I did a video about that. Check out my must-watch crypto playlist because it's going to cover everything you need to know about the central bank digital currency and everything that you need to know for cryptocurrency in general. But in addition to the digital dollar pilot with the New York Fed, we have the Project Cedar. We also have the Boston Fed and MIT with something called Project Hamilton, which is also another experiment for the central bank digital currencies. Isn't that very coincidental? So I will say, FedNow, and I'll go on record with this, FedNow instant payment service is not a central bank digital currency in disguise. I will repeat, FedNow is not a CBDC in disguise. Okay? But it is a precursor to their rise. I.e., for example, as I mentioned, the New York Fed, the digital dollar pilot, Project Cedar, and then Boston Fed and MIT with Project Hamilton. And I'm sure there's other things happening that aren't public. And if there's something I'm missing, I would definitely love for you to comment down below if you know of other Federal Reserve branches that are working within the CBDC area of experimentation other than the New York and Boston Fed. Please comment down below because I would definitely like to know that information, and I'm sure others would as well. And this is a tweet directly from the Federal Reserve talking about the launch of the FedNow service in July. So this is coming. Now, if you think about everything that's transpired this year, and you think about these banking collapses that are happening, whether on purpose or because of interest rates or whatever the situation might be, and then you think about the launch of FedNow and the coming CBDC, there's no way this is all by coincidence. There is absolutely zero way that all the things I just mentioned just so happened by coincidence. There is absolutely 0% of that occurring. So that's just my 2 Satoshis on that. The next thing I wanted to share was from Cointelegraph as well, printed on March 14th, 2023. And this is just to give a little bit more information and insight, and I'm not sure if I'm saying it correctly, but the tacit blockchain to join FedNow service with B2B on ramp as pilot prepares for launch. B2B is business to business, in case you're unaware of what that means. P2P is peer to peer, person to person. The New York based Fed, I don't know why I said Fed. It's just, I got Fed on my mind because this is a video all about the Fed. But the New York based fintech firm said it would provide an API to allow clients to access the new Federal Reserve real time payment service when it premieres. The blockchain operator Tacit announced on March 14th that it would provide access to the U.S. Federal Reserve's FedNow payment system, which will launch as a pilot project later this year, obviously sooner this year. Will provide real-time, round-the-clock payment service. Tacit will serve as a business-to-business on-ramp for FedNow through a client-facing application programming interface. CEO Kevin Green told Cointelegraph. Both the company's interbank and intrabank services will provide FedNow access. So I want you to realize that this is a reality, a huge reality. Now, I did a video that came out yesterday, and I talked about this in a little bit more detail, but this comes from a study that close to 190 banks could face SBV's fate, according to a new study. And this came out on USA Today. This is a different article than I shared on yesterday's video, but the same idea because I shared two other articles yesterday. And this came out on March 19th, 2023. And the main things that I wanted people to focus in on was just the very beginning of this. On the heels of SVB's collapse earlier this month, 186 more banks are at risk of failure, even if only half of their depositors decide to withdraw their funds, a new study has found. I say less than half, and this is the important takeaway. That is because the Federal Reserve's aggressive interest rates to tamp down inflation have eroded the value of bank assets such as government bonds and mortgage-backed securities. The recent declines in bank asset values very significantly increased the fragility of the U.S. banking system to uninsured depositor runs. Now, again, FedNow is not a CBDC in disguise, but it is a precursor to the introduction. And to wrap things up, 4 words, which are problem, reaction, solution, consolidation. Thank you for watching today's video. Make sure you are subscribed to both Rice TVX and my other channel, Rice Against the Grain. I will leave you with this. I encourage you, as always, to be a blessing to others. Treat people how you want to be treated. Be the glitch you want to see in the matrix. Be the change that you want to see in the world. And until next time, practice change.